Welcome everyone to the Kendall Report. It is Thursday night, the final broadcast for the week. So we will be trying to summarize a number of things that are going to be important to setting up for the database and for coming into next week with full earnings going on. So let's talk a little bit before we get into some of the other further details about what happened yesterday. S&P was down big on the open, up down 1.5, finished down 0.3. Nasdaq actually finished higher, and Russel was down 1.07. So we've been seeing this pattern. I'm going to talk about this a bit more later, but the pattern that we've been seeing as we come down into this low 37.40. Today we traded 23, and the market just rebounds, goes right back 3,800 is like a magnet. So I'll go into more details in the technicals here in a few minutes. But before I get into much more detail, make sure you subscribe, hit that like button if you're watching right now, and make sure you hit the notification bell so you know when I come live. So let's talk a little bit about some of the news that came out yesterday, and I thought, and also the reaction to it. So PPI was on everybody. That was the top report that came out. It came in at 0.11 year over year, 11.1. So this is the number that precedes the CPI, right? So that means CPI is probably not going to be down next month. And so all of the talk on the street was about the Fed now going to do a full percentage point. Now, we heard that rhetoric yesterday as well, and they just may do that. And it was interesting today. I was watching Waller on Bloomberg for a little bit, and he said something that was insanely, I want to call it stupid, but at least I'm going to call it that he evidently believes that the rest of us don't have any clue how the world works. But he said we're not in recession because there's no recession with a unemployment rate at 3.3%. And but that's the funny part about that. You have to be at the lowest rate to start the decline. You don't start the recession at 5-6% or more unemployment. So it was kind of silly what he said, because there's no recession. There's nothing to see here. We've got everything under control. And I think it's amazing to watch these people talk in public, because they evidently think we don't understand what's going on, that we don't live in the world. We don't see the numbers out there, not just gasoline, but food and everything else. And now services, everything's starting to go through the roof. And we're seeing, I talked about the real estate. I don't think, and I'm going to continue with this on real estate, I don't see there's a lot of reported price decreases on listings, but that's because they were overpriced to start with. I think overall there's going to be a stable pricing market from the real estate standpoint, because we're still, even though lumber and materials have come down a lot, everything else has went up because the labor is tight, especially in the building area. So I just don't see the prices falling much. The demand is definitely falling. There's definitely longer times on the market and all those type of things. But I don't think prices are going to drop that much. I continue to talk about something that I've mentioned several times before, is replacement cost new is going to drive the pricing in the market. So there's going to be a limitation on how far it goes down. Everybody was so used to this hot market that you could price things virtually any way you want and get away with it. Now pricing's being scrutinized just a bit more than it has been in the past, mainly because interest rates and mortgage rates have went up, and that's reflected in the mortgage applications that came out yesterday, down 17%. But like I said, I still see the real estate area still coming off substantially, but prices are going to hold for a while. We'll see. We'd have to see a massive deflationary dump in some of these materials out there. So just looking at my notes here, for tomorrow, we have another big day tomorrow. We have retail sales coming out, expected to be plus 0.8. Empire Manufacturing is going to be off, and this has been happening for a while, where we're seeing the manufacturing continuing to soften as well. Industrial production's basically flat, 0.1 is what the 0.1 is expected, and consumer sentiment to come in at 50. So that's neutral. Below 50, I believe, is contraction, but we're right on the edge. Maybe we get a inflationary number as well. But this continues to be one of the most, I guess, talked about thing, is this recession, no recession. Now all of a sudden, people that were saying there's no way we're going to have a recession are now going, we're going to have a recession. as you know, I believe that we're basically in a recession right now. When you look at some of the things that are happening, not just housing, but other things, you look at obviously demand destruction that's going on in crude oil. We're continuing to be under pressure there. And I think that's a lot of anticipated demand, more so than real demand destruction. And it's everybody starting to price in a recessionary type environment. And that is going to be, I think, continued as we go through earnings. We're going to hear more and more of this. Everybody has programmed into their dialogue, no matter what they're doing, about the economy softening and things are changing and all that kind of stuff, right? That's just, and I saw somebody mention, are we going to talk ourselves into a recession? I don't think so. I think it's a real recession based on just the prices and how everybody's wallet's being dug into every time you go and fill up your car. And I guess where I'm going with this on the economy is we're going to continue to flatten out. We're in a recession. It's just how deep will it get? And I'm not going to do it tonight, but I will be working on a project over the weekend talking about if we get into a more severe recession, where do the markets go? And one of the things I wanted to talk about tonight, and it's the title of this video, is why the third quarter markets are going to continue to move higher. In spite of what we saw over the last couple of days, and the weakness that starts off in the morning, there's plenty of buying out there. And the configuration I've talked about on the quarterly chart, that I expect to see Q3 have an upward bias throughout this coming several months. It doesn't mean we're going to go straight up. I think we have a lot of work to do, but I still see the market rallying. And I'll show you in the technicals here in just a few minutes, is that we really don't have, nothing's changed a lot. The PPMs and other momentum, the configuration of them are very positive yet. So I'm not about to join into the camp where we're going to roll over and go straight down. I think it would be too easy, because that's just about what everybody expects to happen. But it really has more with the configuration, which I'll show you here in a couple of minutes. So we did see JP Morgan come out today. They missed the earnings. There were a lot of negative comments in there. And Jamie Dimon, always colorful guy, he had plenty to say about things and trolled the regulators and just about everyone else. It was down 3.5%. Morgan Stanley came out. It was flat, up 0.4. Nothing really there. But tomorrow we have BlackRock, we have Citi, Wells, and then the other big companies coming out is United Healthcare, and that's been kind of on the defensive side. But there's other financial institutions that aren't major like that, but there's a ton of things we're going to find out as we come into tomorrow. And this forward guidance, and like I said, guys like Jamie Dimon are willing to put it out there and be fairly aggressive about how they approach the market. There's others out there like him, but Jamie's always the guy to really step out and say what he's thinking, right? And so the point is, be careful tomorrow, but I think we're going to see these numbers come out pretty good, and we're going to watch the market close up tomorrow. I'm still looking for higher prices. The way we came in this morning, just to talk about that PPI number at 1.1 and year over year at 11.1, what we saw in the reaction when it came out, it was very muted. It was like, did it come out? There was a little bit of a blip. And I made a comment in our live room yesterday that if the CPI can bounce like that with that crazy number, then PPI is going to even maybe be more powerful. And it was a steady grind throughout the session, just continued to grind up right into the close. We didn't quite get over the 38 handle in the day session, but overnight we've seen it print up to, I think, 38.11. I'll go through those details here in a second. Just looking through my note, yeah, the other thing that needs to be talked about, I think it was 2 videos ago, I talked about the King Dollar is killing everyone. Dollar yen is printing 138.9 as we're speaking. We saw the euro plummet below parity. A whole lot of things are happening, and this is just exacerbating everything that's out there. And we're not seeing any, I talked about the bond selling that would happen if we got above 137. We're not seeing that happen yet. And I'm not sure what's going to trigger it. I do have objectives. I'm not going to cover the dollar or the yen tonight. I'm just going to mention them in the opening comments. But I do expect to see 141 plus on the yen, and the dollar is still looking at 111. I don't see anything changing. And if you want to see more deep analysis, you can go back 2 videos ago. It's marked when I go through the dollar. You can see and watch that section. It's all labeled on the timeline. Just final comments here that I have is really just the things that are also coming out tomorrow are retail sales and Empire Manufacturing. I did discuss this in industrial production. So, let's go ahead and take a look at the database, see how that's acting, and I think you'll find that interesting as well. So we downticked a little bit. We downticked to 45.58. Yesterday, we were at 47.17. We had 284 buys, 643 sells. We're still above that magic 42%. So that is going to be the number to watch. If we dropped under that, if we did have a negative day tomorrow and we saw the database drop below 42%, that would be a bit of a warning sign, and I'll cover that on Sunday night. I don't expect that's going to happen. It looks like things are fairly stable. Since we're coming into Friday and the end of the week, one of the things that we do is we update our intermediate database. So the intermediate models will run, and last week we upticked a very slight amount. We didn't really get any serious traction, but I'm thinking with the stability that we're seeing, even though the markets are gyrating here in a very volatile fashion, it depends on how we close on Friday. So if we do manage to close a little higher on the week, that will be a positive tone. And I think you'll see when I go through the technicals that looks like that's going to be a possibility. But I think there's a lot that's very close to these intermediate trades starting to come on board. And if we see some decent rotation, meaning that we get up 12, 14 plus % bullish, I know we're at 8, and that's not a lot, but last week we saw some interesting stocks start to roll in, and a lot of things are looking like they're stabilizing here at these levels. So I'm not a super bear on the markets at this time. I don't see that scenario out there at the moment. So the first market that we'll cover tonight is the S&P. And what we've got here is the beginnings. Let me slide this over so we can see this just a little bit. What we have on the PPMs, what I was talking about is the configuration, what's important. The numbers, we're not at a point where we would be getting very robust numbers. What we have to do is we have to get above this 10 and 21 period moving average. 38 is the 10, 38.16 is the 21. And if you look at the market grid for today, I'm going to say watch for S1, R2, so we could see some weakness, maybe down to 37.71, and then look for a rebound back above towards the 38, 39 level. And it's possible that we get into that mode where we just break out of R2 and start to print up into R3 on the upside. I still am very positive on this pattern. And the pattern that's setting up here is, like I said, we're getting that rounding bottom here. We're also getting the potential for the bubble bottom, which we saw in May. And this isn't necessarily a big uptrend, but we are looking for the potential going up to these Fibonacci targets up here, which high target one is 40.52. I've talked to you folks about this number a number of times, 41.71, 42.44. They're still in play. Now, what happened today, we had a couple data points, and I talked about them last night. We had 37, 44, and 41. Well, we took that out. We printed 37.23, and they just traded down there for maybe 8-10 minutes, and then they started to rally, and then we were at 40, back at that 40, 44 level, and then we just kept stair-stepping up 60 and then 80 and all the way to 38 even on the intraday session. We found some resistance there, but the pattern was very positive throughout the session after those lows were printed. So there was nobody looking to sell. The numbers were horrendous, right? We had the huge PPI number come out, and nobody cared. It really wasn't a factor. So it's starting to get more, is getting programmed in, even with all the rhetoric around a 1% increase on the Fed and all that. And I'll cover the treasuries here in a minute. The treasuries downticked in spite of this. The short end is still where the action is at, and I threatened you that I was going to talk a little bit more about the yield curve. I did not prepare for that, but I will get ready on Sunday night, and we'll maybe do a little longer session, and we'll get into a little more theory on yield curve and what that means and where we are right now. And I'll show you that when I go through those numbers. But looking purely at these equity markets, I still like this pattern. It's not over. Let me move this out of the way here. When we were setting up this pattern here, we kept drifting lower and finally found a low when we got over to in March. We got to those March lows. We finally got a decent pattern. I think this configuration is a little different in that we're getting the PPMs are at a much better position here. And as long as PPM2 stays above its first, second derivative in this pattern, we're going to be fine. And especially if we get the close over, if we did hit R2 or close near R2 tomorrow, which is going to be that 38, 30, 39 level. If you look at the moving averages here, it's 38, 38. So that would just put us right over there. So if we do manage to trade up to an R3 and we get a stronger close tomorrow, that will set the tone as we come into next week. And I think the best way to look at it, see how these earnings come out tomorrow. There's, like I've been telling you and set you up for all week, is Friday's going to be a big day. Normally, earnings on a Friday are very light, but the folks that are reporting tomorrow is going to be significant. As I said, the banking sector is kind of kicking off the real earnings, and we got plenty to go through in the next several weeks. And I think it's interesting that the analysts are continuing to, I guess, are reluctant still to downgrade a lot of these companies. And we'll see if the companies are willing to do their own downgrades and their forward-looking guidance is weaker. So far, that's kind of a mixed picture, even though Jamie Dimon it was funny. And one side he was talking about how, the consumer is really strong, and then he was talking about, the availability of credit and other things that were maybe not that strong. And so it's kind of interesting that, these guys are politicians to a point. They don't want their stock value to go down too much. But the point is that we've got a lot coming out tomorrow. The banks are going to be in focus, and especially with all the things that are going on, like I said, with real estate and mortgage apps being down. Most of the banks are not that invested. About 68%, we'll call it 70% of all the loans being originated in the U.S. is done with non-bank entities. And you can look at some of those symbols, RKT, look at Loan Depot. You'll see that these companies, for the most part, are destroyed. I think RKT has rallied just a little bit lately, but if you look at where it's been and where it is now, it's really big. So these mortgage folks are really getting hammered because there is no refi market. That's non-existent. Who's going to take a 3.5% mortgage and refi it at 5.5%? Nobody. And then the margins on the front end of the yield curve is continuing to squeeze that. The only thing they have is their servicing, which is usually pretty valuable, but it's not enough to carry the business. And that's why you're seeing those things happen. So there's definitely a lot of issues to watch out for in the economy. But I think in general sense, we're going to see this the markets start to move higher. So next market is the Nasdaq, same configuration. It's flattened out a little bit on PPM 1, but we're at a 0.21. We're right on the edge of being in trend mode here. And the 10-period moving average, let me bring this up on scale for you so you can see the pop-up. The 10-period moving average right now is 11,861. We're trading 11,856, so we're just about over that. So I think the Nasdaq is going to lead the way here. Got a nice upward slope. The PPMs aren't in this big robust phase, but a lot of times on these type of rallies, we don't get, other than maybe the PPM 1 will get strong and maybe the others will lag. But one of the things that's happened on all these indices, if you look, the PPM 3 is starting to really accelerate here, which tells you that the 40-period moving average is trying to roll up. So we get above that number, that's going to be the key as well. So even if you're looking at the S&P or the Nasdaq or the Russell, if you can close over the 40, that's 11,963. That would be a bit over R3. We'd have to, a bit over R2. So there's a very strong possibility those things can happen today. And with the news coming out, if we get some decent earnings and this PPI, you'll be surprised how fast the markets forget these CPI and PPI numbers that came out. And we'll be watching the treasuries as well. And there's a number of things coming out. And I do want to point out, I did not point out, but on the S&P futures, we do have a cycle that low that was due today. So we didn't quite get the higher close. We did get NASDAQ to close a touch higher, literally flat to higher. But the configuration is still very positive here on all these indexes. And really, if you look at what's happened over the last, we'll call it 6 weeks, we've just been trading in this sideways range, and we continue to do so. And I think once we break out over the highs over here, 12,200 on the NASDAQ, on the S&P, it's at 3948 is that number. And when I go through the Russell, I'll point that out. But these are the numbers that I think there's probably a 60% probability that we're going to get above those numbers yet. So we'll just continue to watch this pattern. And on Sunday night, I will address some of the longer term aspects as we go through this month. We're mid-month here, so I'll go through that on Sunday night and see if we can come up with some scenarios and where the targets are going to be and some of those other items there. And I'll also have the knowledge of what happened with the database on Friday's run. So next market we'll look at is the Russel. Russel continues to be a little bit weaker. Like I said, this is the RTY, so this is the futures. We're up 0.37 right now. So a decent uptick. Pretty much everything. The Nasdaq right now futures are up 0.49, the S&P up 0.36, and the Russell's up 0.35 right now. So everything's kind of printing higher and setting the tone for as we come into the morning. I do expect to see some weakness early in the session across the board in these indexes. If we trade up to above R1 and R2 early in the session, then we're probably going to see a rejection. It may not end up to be quite the day that we're talking about. I'll try to make some comments on Twitter tomorrow if there's anything going there. And remember, you can follow me on Twitter. It's Twitter/portfolio expert, no E in the expert. But yeah, so these patterns are set up, and it looks to me I'm continuing along this dialogue just because of the overall configuration. I mean, this is a massive consolidation here, and we went through over here going back to February, and this mess over here consolidated for a lot longer. It was very frustrating. I remember that period of time where we'd break down and then it would just reverse back into the pattern. It was very frustrating for all the way after the initial decline in January. February was really a choppy month, and then we've seen a continued decline. Like I said, I'll go through the longer term aspects of all of the markets on Sunday night. So next market here is somewhat interesting, is the treasuries. We have a cycle due today, and that's going to be, it's really difficult with the PPM 1 is turning up, PPM 2 is in trend mode, PPM 1 is in a trend mode even though it's turned up, and PPM 3, they're trying to stabilize here. And I've been talking about this. I think we're pretty much at the lows of the rate of the yields from this standpoint. Looking at the 10-year, we're probably going to stay between. We're going to continue with. I'll bring up the weekly chart so I can bring up the grid so I can talk to you about that. But I still think around 305 is going to be top end, and absolute bottom is still around maybe 285. And the thing that's interesting here is even though some of these PPMs are turning up, the trend is down in yields right now. And you would think with all the talk of the Fed raising rates and all that they wouldn't look that way. But this is the back end of the yield curve, right? So let me bring up, speaking of yield curve, let's bring that up. And so I reorganized this pattern. Matter of fact, bear with me a second. Oh, you know what I did is I did it on my other box, so I don't have it. So, but you can see that we had quite a bit of flattening in the 530s over on the right, and the 1030s. They're still flattening, and the 210s continue to be inverted. That's the talk on Wall Street right now. And that's where all this happening. On Sunday night, I actually am going to make a note to myself right now to cover the yield curve. I told you last night I would do that. I apologize. I'm just not have the computer set up to do that. It would take me too long. It would become awkward to do that. But the yield curve is still, while it's flattening, there's still a positive shape to it. So it's more of a flattening yield curve with a spot in it where that 210s, that the 2-year is definitely got an inversion, but nowhere else does it exist. And like I said, I'm going to be full on with the inverted yield curve when the back end of the yield curve inverts. And we have seen that. And the last time I saw that was in 1981, or one of the times it stands out that when that happened. I just want to go back to the yield chart again, and let's take a look at the weekly, because I want to establish that range just a little more accurate than I did. So here we go here at R1 is 319, and I this is the same basic configuration that we're seeing in crude oil too. Crude's got it slightly different, but we get this giant box formation. What I'm expecting is that when we get the update tomorrow night, the update will show that the volatility is going to contract. I showed you folks that live chart last night how when the volatility expands, how fast it will contract back in. And I do expect to see this narrowing. And so we'll really be able to define where these ranges are going to be. Right now it's around 281 to 320. And, this week the high was 307 and the low was 289. So it's been, from the standpoint, it's been right in that range. S2 was 291, so we basically printed S2. R1 is 319. We didn't get close to that. So I've been talking about the numbers really at the 298 to 3% number. That is where the 10-period moving average is, and I just think we hover right around there. Like I said, maybe 303, 305 would be the upside, and 289 on the downside, at least as we see it right now. And I'll update this on Sunday night as we come into next week. Next market is crude oil. Crude is just seeing amazing volatility, and we traded down. I talked about this pivot zone last night at 93.12. Well, we printed down to 90.56. We closed back at we're at 96.60 right now. This is the weekly, but we did print down pretty good, but we're seeing some stability. 95.75 is S3, 92.96 is the STX number. So if we close under STX, which would be 92.96, so we did get a sell-off again tomorrow, that would set up an RTX or STX buy signal, suggesting we'd get at least a couple of weeks of sideways. Now, one of the things that is still valid from this standpoint, we look at the PPMs, we have PPM2 is at a 0.61, and I think as long as it stays above about 0.4, 0.35, if we come into next week when we get our first print on this, on the update here, we're going to potentially see the market want to rebound back toward this 21-period moving average. So 103.72 is that number right now. It's still rising at a decent probability, so it'd probably be closer to 104. So we could see a decent rebound out of this level. If we look at the daily, see the dailies the last 3 days we did see some movement, but we're getting that what I call the bubble bottom formation, and the PPMs are trying to bottom. They're all very negative, so there's lots of overhead resistance at 100 to 104. So any rebound above 100 right now is probably not likely for the next day or so. We'll have to see this PPM 1 actually drop below probably about 0.2 on this index, and it's 1.215. So we'll see, just looking at the chart, once we start to see some of these numbers fall off here on the 10 and the 21, we should see these indicators actually turn up and give us at least a signal to retest that 10-period moving average, which right now is 100.5. Next market is gold. I've been talking about gold. We got hit pretty hard. It's rebounding a bit right now. We traded down to 16.95. I mentioned last night about being in the 16 handle, and based on what's going on with the Dow, I mean, there's an argument for mid to low 1600 on gold, and even a potential to see 15 handle at some stage. And haven't heard this top spike going back a number of months ago. This is daily. This is where our good friend Peter Schiff and I think Raoul Powell or somebody like that were just screaming, we're going to the moon. And that was the absolute high. So the point is that this is still in a big downtrend. These are trend numbers that we're seeing here. I'll go over to the weekly. Weekly's trading down to that number I talked about. The STX number is 1681, so we printed 95, which is S3 is 1696. So far, S3's been played out, and then the 200-week moving average is 1714. So we're hanging right on that thing, 1713.60 last trade. So we're hanging right on that support level. I suspect we'll stay above that 200. You can see the upslope in that, so the angle of attack suggests that we're likely to hold right in this level right now, maybe get a little rebound for a couple weeks, and then back down again and retest these numbers. But there's an argument for the low to come in here, and maybe as I mentioned, there was a cycle I tweeted out earlier. There's a cycle in the Dow that coming in, so we might see some hesitance, and maybe the Dow goes sideways here for a number of days before it looks like it will continue higher after that. But at least maybe gold can get a reprieve here from that standpoint. Right now, DXY is down 0.15. That's given enough room for gold to catch a little bid here. Final market I covered tonight is Bitcoin. And I've been talking about Bitcoin. It's actually continues to be very impressive. The weekly chart are trying to get through the first derivative here on the PPM 1. That suggests that if that happens, that we're probably going to rise back above the 200 and challenge toward the 10-week moving average. That number right now is 24.8, but it's dropping roughly about 1,500 points per week. So that's going to put us down at 23.2 or something like that. I've been talking about these numbers. You can see just on the market grid, 23,309 is RXT. So R3 is 22,654, R1 21,189. So we haven't quite got there. That'll be your first stop. As you know, these numbers are good through Sunday night at midnight Eastern time. Quick glance at the daily. I'm going to have to blow this up. It's been so narrow that it's almost impossible to read here. We're actually getting above the 10-pair moving average with the PPM1 at a 0.80. So we're actually in trend mode on Bitcoin. Support 20,537 right under where we're trading. 20,413 is the 21. So your support zone is going to be 20,537, 20,413. And the potential here is we're looking at these PPMs. I've been talking about how they're expanding, showing us that there is a short-term trend here, and then we should move toward those weekly numbers. But the weekly numbers are going to hold this back. So somewhere around 23.2, is going to be the top, and then we're going to remain in this area. I don't see us getting above there, printing up to 24,000 or anything like that. So just expect that to kind of set up as far as the overall pattern comes over the next several days. Okay, folks, that's going to do it for this week. I promise you on Sunday night I will have the yield curve explanation. We'll do a little bit of education there and talk about what that really means and what my expectations are around that. And we're going to have all the stats updated. Obviously, all of our models, everything will run on after the close on Friday, and I'll have all that updated. So as always, thanks so much. Everybody's in the live room. Thank you for participating. Get these indicators. They're amazing. They're very powerful in helping you to identify trading turning points, all types of things. I showed you, watch last night's video. I kind of walked you through yesterday's rally, how it led us right to the rally all the way up to 3,800. Did the same thing again today. So anyway, folks, have a great day trading tomorrow. Have a good weekend, and we'll see you on Sunday night. Hey, Brian, I'm answering your question. When the market grid narrows and it's on a low like Bitcoin is, it does suggest not vulnerability, but a change in direction is likely. And if the previous direction was down, then it usually will reverse up. Hope that helps. Have a great weekend. We'll talk to you all on Sunday night.